The Chinese tech sector is seeing a steep rebound today. It's up more than 20% from its May low. Let's bring in Yahoo Finance's Jared Blikre to discuss this more. Hey, Jared.
Hi there. I'm looking at the Hang Seng here, and you can look at various subsectors in tech, but this is basically a tech index. Let me just show you what's been going on year to date. Now, we are substantially off of this high right here, but as you point out, we have been picking up recently. Now, in the context of its prior low, its most recent low was really late last year. So this market was technically in a bull market, if you believe in the 20% rule, late last year, and it's still in that bull market. And let me just show you what has been happening with Chinese shares recently. So these are NASDAQ Golden Dragon components. Here's what's happening today, kind of a mixed board, but different picture when you take a look at the 5-day. Lots of big pushes here. Pinduoduo up 14%. That's a pretty big one. Alibaba up 6%. JD.com up 5%. And then you take a look at what's happened over the last 3 months, and we sort by performance. We can see some really huge outperformers. The EV space has been hot overall, so not surprisingly, we're seeing XPeng in the upper left. That's up 108.7%. We see NIO on the top line, that's up 70%, but we have some others too. I mentioned Pinduoduo, that's up 30%. So what has been happening here? Let me show you the buying that has been taking place over the last week. Now, this comes from Goldman Sachs. This is their prime brokerage book, and this is showing huge inflows into the Chinese market right here. This chart goes all the way back to just before 2019, so late 2018. But what I'm seeing with these spikes that we're seeing, and here's another one from late last year. Here's another one in probably mid-second quarter of 2022. And here is in the beginning of 2021, but you line up these points along with the Hang Seng that we were looking at originally, that is the stock market, those are actually reversal signals. So unless we're in some kind of a new market paradigm right now, investors may not want to be chasing equities from China at these lofty levels. Here's the Hang Seng one more time, and if we take a look at the 3-year, we can see indeed the big spike that we saw in the chart. Those biggest inflows corresponded to the top in 2021, early that year in the Hang Seng. Also, the Chinese currency has a lot to do with what's going on. The Chinese yuan, that has been largely weakening over the past few years. And here is a 3-year view, and you can see we're up. By the way, up means a weakening with respect to the yuan. So it's at some of the weakest levels that we've seen since 2007. You have to go all the way back here. The Chinese have been trying to stimulate through the property sector of their economy, but it's been very targeted. So again, without blanket stimulus, it's hard to imagine continued up growth in these Chinese equities, guys.
Indeed. Appreciate that update there, our very own Jared Blikre.